Imagine waking up. You check your trading app. You expect profit, maybe even life-changing money. But instead, your account says 수험번호 0. And below that, 3,742 negative. You don't just lose money, you owe money. Now let me ask you something. Are you trading the market, or is the market trading you? Today we're going deep into what really happens when your trading account gets liquidated and shows a negative balance. Not the Instagram version. Not the bro just risk 1% version. The real story. Because if you're between 18 and 30 and building your financial future, this could either be your wake-up call or your breaking point. Stay until the end. Because what I'm about to share might save you years of regret. Let's break it down. Liquidation happens when your losses reach a point where your broker forcibly closes your position. Why? Because you're trading with leverage. Leverage is like borrowing power from the broker to control more money than you actually have. Sounds exciting, right? It is, until it isn't. For example, you deposit $1,000. You use 50x leverage. Now you're controlling $50,000 in the market. The market moves 2% against you. And boom, your entire account is gone. Not slowly, not gracefully, instantly. And if volatility spikes, slippage happens. The price moves too fast. Your position closes below your stop. And suddenly, you don't just lose your capital. You owe money. Now pause for a second. If you can lose 100% in minutes, was it really investing? Or was it gambling with extra steps? Here's what nobody talks about. The emotional crash is worse than the financial one. First comes denial. This must be a glitch. Then panic. Maybe it'll reverse. Then reality. It's gone. And that negative balance? It feels personal. Your confidence drops. Your identity shakes. You question everything. Am I even cut out for this? Let me tell you something powerful. Liquidation doesn't mean you're stupid. It means you underestimated risk. And in your 20s, underestimating risk can cost more than money. It can cost time, momentum, belief. But here's the twist. This is also the moment that separates amateurs from professionals. Liquidation is not bad luck. It's usually a chain reaction. Let's expose it. Overleveraging, you wanted faster profits, so you increased lot size. You thought, just this once. No real risk management, stop losses too wide. Or worse, no stop loss at all. Revenge trading. You lost one trade, then doubled the next. I'll make it back. Blind faith in concepts. You memorize terms, liquidity, FVG, order blocks. But understanding theory is not the same as mastering execution. And here's a pattern interrupt for you. If strategy alone made people rich, every trader with Wi-Fi would be a millionaire. But they're not. Why? Because trading is 80% psychology, 20% strategy. Liquidation exposes weak psychology instantly. Now here's the cliffhanger. What if liquidation isn't the end? What if it's the tuition fee? Stay with me. If your account just got wiped out, do not deposit immediately. That's emotional trading. Instead, step 1, stop. Take 72 hours away from charts. Yes, the market will move. No, you won't miss the opportunity of a lifetime. There's always another setup. Step 2, audit everything. What was your leverage? What was your risk per trade? Did you follow your plan? Or did you chase dopamine? Step 3, fix risk first. Before thinking about profit, cap risk to 1 to 2% per trade. Use realistic leverage. Think survival, not excitement. Because wealthy traders don't focus on winning big. They focus on staying in the game. And here's something important. Most brokers in regulated markets offer negative balance protection. But some don't. If you're trading crypto perpetuals or offshore brokers, you are responsible. That negative balance, it can become real debt. So choose platforms wisely. You're building a wealthy lifestyle, not a financial trap. Let me shift your perspective. In your 20s, your greatest asset isn't money. It's time. A blown account hurts, but a blown mindset destroys futures. You can recover capital, but only if you recover discipline. The traders who become wealthy aren't the ones who never lost. They're the ones who learned faster than they lost. Liquidation forces maturity. It forces humility. And if handled correctly, it becomes the foundation of your future edge. Ask yourself, do you want excitement or do you want freedom? Because they rarely come from the same decisions. Now here's the part most people ignore. The market doesn't reward confidence. It rewards control. And if you think extreme risk leads to extreme wealth, you need to understand the psychology behind the most famous trading story ever told. In my next video, I break down The untold story of the Wolf of Wall Street and trading. Not the Hollywood version. The financial reality behind the hype. Because what looks like power often hides collapse. Click on the video appearing on your screen right now if you're serious about building real wealth. Not fantasy profits. Watch that next. Your future self will thank you. And remember, the goal isn't to avoid losses. The goal is to survive them long enough to win. I'll see you in the next one.